Hi everyone, this is Ina. I'm here with my friend Kirk Saylin. Kirk is a lender with Nexa Mortgage, and recently he and I were having a conversation about first-time home buyers and how so many home buyers are going with condos these days. And we had a really good talk, and I said, hey, we have to get in front of the camera and share this with everybody. So without further ado, Kirk, could you introduce yourself and share a little bit about what you do with lending and with working with first-time home buyers?
Sure. Well, thank you for having me today. It's a pleasure to be here. Like she said, I'm a lender with Nexa Mortgage, one of the largest brokers in the United States. I help investors, developers, and home buyers find the right investment, find the right financial tool to buy the property that they're looking for. So thanks for having me today.
Absolutely. What's your favorite thing about working with first-time home buyers specifically?
I love working with first-time home buyers because it's a fantastic opportunity for them to start building wealth and to find a home that they can start building memories in. So it's a fantastic journey to be a part of, and I'm honored to be a part of it.
Same, yeah. I feel the same way because buying a home for your first time is almost like a rite of passage. It's a big milestone in your adult life, and being a part of it is, a huge honor. So my next question for you is, what are the most important things that a first-time condo buyer should know before applying for a mortgage?
Fantastic question. There's a lot of moving parts to getting a mortgage, and two of the most important things I think are to find a fantastic real estate agent to help you through the process and to help you evaluate HOAs, evaluate properties, and find the right solution for you. Same with a lender. Getting pre-approved at the beginning of the process is a great step because it helps you define your budget, what you're comfortable with, what you can really comfortably afford, and then it helps the home buying process so much easier because you eliminate so many different homes that wouldn't otherwise be an option.
Yeah, I totally agree with that because I think before you get your pre-approval, which a pre-approval is when you apply for a mortgage and a lender like Kirk tells you you're qualified for up to this amount, let's say $700,000. And that way you're able to go shopping for real. Because before you get that pre-approval, you're kind of like window shopping. You don't really know if you can afford what you're looking at. And it can be a big disappointment when you see something that you really like and then you learn that you can't qualify for that loan. So getting that pre-approval is, I think, pretty key to getting serious about buying that first house, right?
Pre-approvals also help the seller because it has a confidence behind it that you are pre-approved for a certain amount, that you have the capability of purchasing the home that they're trying to sell. So especially if you're in a situation where there are multiple offers, your offer can be more attractive because yours is pre-approved.
Yeah, and then from the home buyer perspective, if you find the perfect house that you can actually afford, with a pre-approval, you're able to jump on that house immediately. I think one of the worst things is to miss out on an opportunity that would have really worked for you. And having that pre-approval makes a huge difference. Kirk, can you talk a little bit about the difference between buying a condo and buying, a regular
Like a
standalone
single-family home?
Yeah.
Certainly. So there's parts of the process that are very similar and parts that are different. And one of the biggest things that's different, most condos have a homeowners association. And that's kind of a living, breathing entity that needs to be healthy and in good shape in order to make that purchase make sense. If you'll notice when you're shopping that all condos have a different monthly rate for their homeowners association. That affects your debt to income ratio, which we'll talk about a little bit later, but your ability to buy the house because it affects what the monthly payment's going to be. So one of the things that real estate agents help with and lenders help with is making sure that those homeowners associations qualify, that the lender will accept them, and making sure that the property that you're looking at is a good fit because of the financial implications of that homeowner association.
Yeah, and part of the loan process and applying for a mortgage is bringing a down payment. And I think one big misconception or myth out there especially for first-time home buyers, is that you need 20% down to buy a house or you can get out of here. Is that true or is it not true?
There would be a lot less people buying homes if that were the case. A lot of people do believe 20% down is the minimum, and for investment properties that you're not living in, that's kind of a healthy rule. But for owner-occupied homes, especially for first-time buyers, that's not at all the case. There's lots of different loan programs that are specifically made to help first-time buyers. You can do FHA, which is as low as 3.5% down. There's conventional loans for 3 to 5% down. There's, if you've served our country and you have VA benefits, then first of all, thank you. But also you qualify for as fabulous as 0% down. So there's a lot of different opportunities, and there are down payment assistance programs that can help you with that down payment as well.
Not to mention the bank of mom and dad, right? We're seeing a lot of that these days where parents are helping their kids get a jump start on building equity with a gift, right?
Right. So you can use a gift for your down payment. There's a lot of different tools like that can be used. There's seller concessions, which I'm sure Ina will talk to you a little bit more about, that can help in the negotiation process and help to take care of some closing costs or down payment as well.
Yeah, my advice would be to not get frightened by necessarily a price tag or what you maybe think you can afford. The first step, again, is to get pre-approved, because that gives you a realistic look at what you can afford, and there's always options. As they say, everything is negotiable. Kirk, can you walk us through what the loan process looks like from the time you get a pre-approval to shopping with me? And let's say we submitted an offer and the offer gets accepted. What happens after that?
All right. Well, first of all, congratulations on your offer getting accepted. That's a huge step in the right direction.
Yes.
So if you have the offer accepted, then you've had your pre-approval already, which means that you've had your income documented, you've filled out the application, you've submitted documentation, W-2s and bank statements, things like that, to prove to the lender that you're qualified to afford the mortgage. So a big step is taken care of there. So packaging that loan to a specific investor or lender is the next step to that. And then go into underwriting. And underwriting is basically somebody going through, making sure that all the numbers match up, that everything on the application is documented and backed up, and that all of the conditions for the loan are taken care of so that we can get clear to close, which is indication that everything is coming together and that the process is moving forward to close and fund the loan.
Kirk, you make it sound super easy and smooth, but I know that there's a lot that goes into a loan. Like, lenders like to see some reserves, right?
Yes.
I think you mentioned debt to income ratio. Was that?
Debt to income ratio, and reserves are just liquid cash or assets that are able to be used in case of emergency to help you make your payments, just reserves on the side.
And if I can interrupt
Sure.
you, I've seen with a lot of first-time home buyers, they're actually able to pull a certain percentage from their 401k that they've been maybe building up through their work. That helps qualify under reserves?
They actually don't need to use any money from their 401k, but they can just state it as a reserve. They can use a certain percentage of that 401k to say that they have the ability to use that as reserves if they were to need to.
Sorry, I interrupted.
No, not at all.
Debt to income?
Debt to income ratio. So a debt to income ratio is just kind of a fancy way of saying how much money do you have coming in and how much money do you have going out every month. And so the lender wants to make sure that you are within a certain range with your housing expenses, so your mortgage, insurance, taxes, car payments, student debt, things like that, as opposed to how much income you have coming in every month.
Yeah, the way that I explain it to people is, if you make $100 a month, you want not more than $50 of that going towards loans, car payments, things like that, right?
Expenses,
50%
yes.
or what?
50% is for FHA, they want to see it below 50%. So that's something to pay attention to. And there's a whole bunch of different factors for qualifications. And DTI is one, debt to income ratio is one, your FICO score, your credit score is another. And then they're going to want to see a documented employment history over 2 years, documented housing history over 2 years, things like that. They want to see consistency. So it's, for lenders, it's all about risk. So if you were going to lend somebody a couple $100,000, you'd probably have some questions and want.
I would have a lot of questions
right.
if I'm giving you that much money.
Want to see some things to be documented and consistent, right?
Yeah. And one thing I would say, there's a lot, obviously, that goes into lending and into giving somebody a loan. And when you have someone like Kirk in your corner who knows what they're doing, they're able to be in your corner and advocate for you and make sure all the boxes are checked, because ultimately we're both here to, help you with that big milestone. It's a big deal. We can get a pre-approval, but sometimes it doesn't always get approved, right? So what happens when someone doesn't get the pre-approval that they're looking for?
So the good news is that those no's are always temporary, and they give you lots of information about how to move forward. So if you go to pre-qualifying, you don't get qualified for the amount that you are looking for, then we can go in and figure out what the reason is for that. And there are solutions. So if it's a credit situation, if it's a debt to income situation, there are ways that we can move some things around and put a game plan together to resolve them.
Yeah. So I would say to home buyers out there that maybe didn't get that pre-approval immediately like they were expecting, don't get discouraged, because it's the first step. Getting that pre-approval and then getting a roadmap for what you can do in the near future to actually get that pre-approval. It could be things like paying down your debt, maybe taking some steps to improve your credit score, and so on. So don't get discouraged if you get a no at first. Like Kirk said, it's temporary, and it's a process. It really is, and you got to start somewhere.
So speaking of that, when you are thinking about buying a house, it's really advantageous to take that step early, to start looking at your credit situation right now before you are ready to make an offer. And you can also look at some things like don't close accounts. They like to see account history, like the length of time that you've held accounts. And also, they do like to see you carry a balance on some things. They don't want to see everything paid off and zero balance, because they want to see that you're making payments. So certain things like that they like to take a look at.
Yeah, I would say if you have even an inkling that you might want to buy, talking to someone like Kirk, even if you don't necessarily make the next step immediately, will put you in a good position when you're ready to make that move in a year or two, right?
Or 6 months.
Or 6 months, sometimes even quicker.
When the right place comes along. Ina calls you and said, I found it, and you'll be ready.
Yeah, you always got to be ready. Next question for you, Kirk. What are some common mistakes that first-time home buyers make, and what can they do to avoid them?
A lot of those things are, well, one, not getting pre-approved, but we've talked about that, not working with the right real estate agent, which when they call you, they won't have that problem. But other things are within their finances. So if you are in the process of, if you've made an offer, if you're going through the process of getting that loan put in place, don't make any big purchases. We've seen some people go out and be very excited about their new home and buy all new furniture, and that affects their debt to income ratio and makes it so that they can't close on the loan. Also, to pay close attention to if you're buying a condo or you're moving into a planned community, then you pay attention to the HOA and how that fee affects your payments as well.
Yeah, we talked a little bit earlier about the differences between a condo mortgage and a single family home mortgage. There are some differences, and I feel like I'm repeating myself here, but it's really important to have someone that knows the differences and can get you through to close, because the worst thing that could happen is you made the offer and then in the middle of the escrow, your deal falling apart, right? That happens sometimes.
Right. And HOAs, they will affect your DTI, but they also make it so that you never have to pay to replace a roof. Somebody else always cleans your pool. I mean, there's definitely some wonderful things about HOAs.
Cool. Yeah, condos can be pretty good. I'm going to switch gears a little bit and talk about the market, because we see so many headlines these days. I think we've all been waiting for the market to crash for like the last 3 years or something. What are your thoughts on the current market, and especially about buyer opportunities, and specifically in the condo space too?
Fantastic. The market is very interesting. It's always very interesting. If you've paid attention to the news, you know that there's a lot of volatility out there. But honestly, since the beginning of the year, the rates have been fairly steady. They've moved within just above 7% for a 30-year mortgage on a national average to in the high sixes over the last several months. So it's been fairly steady. And yes, everybody is anticipating rates to come down. The thing that will come with that is lots and lots of competition, because there are lots of people waiting for that. So if you do find a property that you can comfortably afford now with the rates where they are now, then that always gives you the opportunity to refinance when rates do come down without competition from anybody.
Yeah, I like your point on buyer competition. I think a lot of buyers out there are feeling discouraged because they see these high prices and the interest rates are higher than they were during COVID times. But there's also a lot of opportunity for buyers because you don't have 100 buyers behind you that are bidding for the same house, which is what happened during COVID times. And then from the seller perspective, you have a lot of sellers, frankly, aren't getting very many offers. So they're more amenable to giving you concessions, let's say in the form of credits. So effectively, a discount on the house, if you will.
Helping you with other costs as well.
Yeah, I've even seen in condos specifically where sellers will give a credit for the first year of HOA dues and things like that. So there's so many different ways to negotiate your deal. But I think the important thing is, to have somebody in your corner who understands and who can advocate for you.
I think one of the most important things to understand is that you don't need to know all of those ins and outs. That's what people like us are for, to help you find out that information and make the best decision.
Agree. And specifically as it relates to the market, my 2 cents to any home buyer out there, whether you're first time or not, is to ignore the hype and focus on what's right for you. Because if you talk to Kirk and he says you're in a great position, you can afford this payment, you feel comfortable with it, and it matches with your goals for you and your family, then why not, if it makes sense for you, right?
Right. And one of the things people don't talk about a lot is that if you're waiting for rates to come down, the home prices aren't waiting, equity is not waiting. So equity in Southern California grows between 3 and 5% a year, sometimes more depending on what area you're in. And that can make a huge difference in what you have to come up with for your down payment and the overall cost of the house when you do decide to buy.
Yeah, my biggest regret was not buying a house when I was 5, wasting time. Yeah. Well, thank you guys so much for tuning in with us today. If you're someone out there who is interested in buying a home, whether it's your first time or second or 100th, you're welcome to reach out to me and I can put you in touch with Kirk. We'll also put up Kirk's information and you can reach out to him directly. And we're really looking forward to working with you in the future.
And we can get you pre-approved and Ina can find you the absolute perfect house.
Let's do it.
Smash that like button.
Okay. That was pretty good.
Yeah, that was good.
Jim's like, again.